What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we completed yet again another bear trap as we rally higher and slice through some very critical resistance zones. Is it possible that we are now heading back into a bull market? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so while many colorful things were said about me over the last couple of weeks because I was bullish, because SPY hit 420 today, I will go ahead and take the high road. But you just have to remember, looking at this chart, everything that I have told you up until this point has been a fact. We have bullish price action. That is a fact. We have a full bull trend. That is a fact. Retail bearish sentiment is extremely high and they are likely to get short squeezed. That is also a fact. And the Stocks channel Discord is absolutely crushing this market. That is a fact. So just keep that in mind if you were caught on the wrong side of the trade during this entire bull rally. It is always going to be better for you if you follow what the chart is telling you and check all of your biases at the door. There is nothing biased about saying this is bullish price action in a bull trend. That is exactly what the chart is telling us. And today we did blast through another critical resistance at SPY 416 on increasing volume. So again, we are getting more bullish confirmation. Now, when we talk about whether or not we are going into a bull market, it is going to be extremely critical to defeat the bear at SPY 421 because that is where the majority of bears have been waiting all along. And I have been very clear about saying that the bears are very likely waiting at SPY 421 and we are only $1 away from that level. So whether or not we are going into the bull market from here is going to heavily depend on whether or not SPY can get 2 consecutive closes above 421. If SPY gets rejected from here, it is possible that this cycle is ending and we are going down for the next leg lower. So for that reason, you can now use critical risk levels at SPY 416 and of course our old risk level at SPY 408. So as we go higher, we want to up our risk levels and we want to make sure we are locking in profits so that if we do see the market reversing, we have locked in profits and we are sitting in cash ready to buy back lower or even possibly ready to short the market. But right now, there's just no reason trying to short the market while it's in such a strong bull trend and there is still too many bears out there. So it is still completely possible that we squeeze right through SPY 421 and the bear doesn't even bother showing up at that level because the bear does not want to get defeated. The majority of bears are retailers and the majority of retailers are typically wrong. So I continue to caution you, do not just join the crowd that is screaming the loudest because the majority are usually wrong. And all you need to do is just read the comment section and look at all of the bears that continue to tell me I'm an idiot and that I am being foolish for saying that this is a bull trend. Keep in mind, this is a bull trend. It is not something that I have defined and it's nothing that I've created. This is a bull trend, whether you like it or not. We have a full bull trend with bullish price action. So manage your risk very tightly around this resistance. But if we do break through SPY 421, it is very likely that SPY is trending up to about 433. So stay on the bull as long as it's here and enjoy the free ride because it's going to be a lot smoother ride if you go in the direction of the trend. So if you continue to think that you're going to short this bull trend, we are likely going to continue to rally higher because smart money knows exactly what you're doing and they are not going to allow the market to go lower while we are at record high levels of retail bearish sentiment. Get on the right side of the trade and stop losing money because this market could and likely will continue to go higher as long as retail stays extremely bearish. Now remember, we are instantly getting more risk off below SPY 408 and that is a long ways down from here. So you will want to manage your risk at some higher level like SPY 416 or this gap fill right around 413. So far, everything is still bullish, so we are not going to bother trying to call a top in this rally, but we will want to watch that critical resistance at 421 very closely. Jumping over to the NASDAQ 100 triple Qs, we were up a whopping 2.79% today, and we did get another bullish breakout with that daily close above 324. And remember, 324 in the triple Qs is the bear market resistance trend line. So this is an extremely bullish breakout, and yes, it did happen on increasing volume. So as with any breakout, I usually want to see some type of follow through so that it's not just a short squeeze false breakout. So we will want to get one more daily close above triple Qs 324, and then we will likely see the triple Qs trending up to the next price target around 334. But we will have very strong resistance right around 330. As you can tell, we are in the bear territory, so the bears will start showing up in the triple Qs at this level. But with retail bearish sentiment extremely high, it is also increasingly likely that we continue to squeeze higher until all of the bears capitulate. So this is extremely bullish, and I do mean extremely bullish if the triple Qs can hold above 324. So you can buy the dip and set your risk at that level. Below 324, it is possible we close the gap at 319, and our critical risk level below 319 is now at 317, with the critical support still at 314. So manage your risk at any of these support levels and trade however you choose to, but do keep in mind it is still a very strong bull trend and it is going to be a much smoother ride if you're taking long trades off support instead of trying to blindly short a strong bull trend. In the Dow Jones DIA ETF, we were up 1.61% after we did get that confirmation breakout from our bull flag with the close above resistance at 333. So the Dow Jones is also now entering short squeeze territory with the next price target just above at 337. If we start breaking back down below 333, watch the gap fill at 329, so that's going to be a very critical risk level. And if we fully close the gap and continue lower, you're looking for a retest of about 326 to 324. As you can tell, all of the indices have the full bull trend with the bull breakouts in the price action, and we are going up on increasing volume on the breakout. So this is extremely bullish price action, and we do have the full bull trends. On the Russell 2000 IWM ETF, we were up 2.86% as we continued to see the small caps leading the way higher, confirming the bull breakout with the second close above 191. So we are very likely going to get that short squeeze all the way up to 200 and possibly even 205. If we pull back, look for the gap fill of support right around 192 and the critical support at 191. So you have two critical risk levels to use, only $1 apart. And you will want to stay bullish in the small caps as long as we're above 191 because we do have a very strong bull trend. And it does now look like the small caps are exiting the bear market and getting ready to go into the bull trend. On the ARKK ETF, we were up 7.37% after we did get that breakout back above 49 after the successful retest of that support level at 47. So we are seeing buyers of the dip in the ARK ETF because we do have the full bull trend and we do have another daily closing high. So the next price target is still up here at 52, but if we start breaking above 52, we can go all the way as high as 55.5. And yes, we could continue to go higher than that, but those are some very critical resistance levels. So stay bullish as long as we're above 49 and definitely above 47. And you can get a lot more risk off if we close down below 47 because it could mean we're coming all the way back down to about 43. On the VIX, we were down 9.33% today, so the VIX continues to get crushed while it's in the bear trend, and the price action is now breaking down below 20. So the VIX continuing to close below 20 will be extremely bullish, and that is exactly why we're getting the bullish breakouts and the strong bull trends as the VIX closes down below this level. A second day in a row, the VIX closing below 20 will be extremely bullish, so watch for that tomorrow. On Bitcoin, we're currently up about 2.5%. Bitcoin is trading right back up to that resistance right around 24,000. And remember, the bull breakout is the close above that level. So if we do close above 24,000, Bitcoin will likely start trending back up to 28,000. Critical support levels are going to be right around 23,000 and 22,600. So stay bullish as long as we're above this support trend line and above our support levels. Our big tech names continue to be hot stocks as Amazon was up 3.53% today and came all the way back up to that resistance at 144. Remember, the bull breakout above 144 will send Amazon up to 152, but we now do have a gap to fill to the downside at 139, so we are leaving a lot of gaps to the downside, so just be aware of that if we do get rejected from resistance at 144. Stay bullish above 138 and below 138 will likely retest 134, and below 134 look out below because we could start closing the gap below, which could take us all the way down to 123. But as you can tell, Amazon has the full bull trend and is knocking the door on resistance, so we could be seeing Amazon at 152 in the very near future. On Microsoft stock, we were up 2.43% today, and Microsoft is getting very close to our next price target at 290, and it did gap up and run today, leaving a gap open at 283. For that reason, 283 will be very critical support, so use that as a risk level. And on the break above 290, we will likely have a very quick trip up to 296. And as you can tell, the Bollinger Bands are allowing us to get there in a hurry. We have the full bull trend today, and we have the very bullish price action on increasing volume. So Microsoft is likely going higher, and it is a market moving stock that is likely going to push the entire stock market higher with it. On Nvidia stock, we were up 5.92% today, and Nvidia came right back up to resistance around 181, and we did not yet close above resistance. We are gaining the full bull trend and we are getting bullish price action, but until we actually get consecutive closes above 181, it is still possible this is a lower high before we go close the gap below. So while this is looking bullish, you need to manage your risk very tightly at support, which is at 176, and you need to get a lot more risk off if we break down below that support. Above 181 will likely fully close the gap just below 187, and then above the gap fill will likely retest the high at 192 and hit the price target at 196. On Tesla stock, we were up nearly 4% today, with Tesla breaking back above the resistance at 864 and closing back above all the moving averages. So Tesla is back on the bull with the full bull price action and trend. So you will want to stay very bullish in Tesla stock as long as we are above 864 and 839, which is going to be very critical support now because the 20 simple moving average is also coming into that support zone. On a bull breakout above 900, we could start running to the next price target at 970. So plan on seeing very impulsive price action in Tesla stock once we start closing above 900. On Apple stock, we were up 2.62% today, and Apple did gap up and close at the high of the day on increasing volume, and we did get the bull breakout above 166, which very likely means Apple is trending up to close the gap at 174. Downside support and the gap fill is at 166, and below 166 we have critical support at 163. Stay bullish as long as we're above these levels, because if we break below them, we could be coming all the way back down to close the gap at 157. On the financials, we were up 2.25% as the financials continue to have the bullish price action and very close to having the bull trend. The industrials were up 2.19%, gaining the full bull trend and getting the very bullish price action, so we are going to continue to go higher. The healthcare sector was up 1.09% with the full bull price action and trend getting ready to break out above that resistance at 134. The energy sector was up 0.72% today, closing back over the 50 EMA, but still possibly forming a lower high before we go close the gap at 69. So jumping back over to the S&P 500, as you can tell, this is a very strong bull trend, and we are seeing bullish price action and bull trends across all of the sectors and the market moving stocks, and that is why we are currently doing the hot stocks segment on the big tech companies. Remember, the big tech companies move the entire market and they are all currently looking very bullish. So do not be afraid to jump on the bull, manage your risk at critical support, and always have a trade plan that is managing risk accordingly. This is not an easy market to try to short, and if you continue to accumulate short positions in a bull market, you are eventually going to realize that you have no exit on that trade and you are going to take a massive loss. So wake up and be objective and look at the chart, and do not have your bear biases when the chart is looking bullish. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly, and we are crushing the market on the Stocks Channel Discord. If you're interested in joining the Discord community, you can find out how to join by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.